They say a rising tide lifts all boats, but when it comes to rising interest rates, not every financial boat is floating smoothly. Instead of lifting us, these changes can make it harder to stay afloat, especially when it comes to loans, mortgages, and credit cards. Schoolsfirst Federal Credit Union is here to help us understand more about rising interest rates and how these changes could affect your personal financial situation. Here to help us navigate is Jonathan Wesson, Madison Branch Manager for Schoolsfirst Federal Credit Union. Hello, Jonathan.
Hello.
Jonathan, okay, so interest rates, they've been going up, but what does that actually mean for the average person?
Well, so interest rates are set by the Federal Reserve, which adjusts the federal funds rate to help control inflation.
Yeah.
Right? So when things are kind of getting out of control, they're going to adjust that rate to make sure that things are staying balanced. In these times, borrowing becomes very expensive, but on the flip side, savings, you can earn, if you're a saver, you're going to earn a lot more money on your deposits, which is a benefit. These changes are going to affect everything from credit card debt to home loans and even investments.
Okay, and to that point, I mean, for those with credit cards, loans, or even mortgages, how do rising rates impact their monthly payments specifically?
So if you have an adjustable rate mortgage, you're going to see an increase with the rate on your monthly payment. So for example, let's say you have an adjustable rate mortgage and the interest rate goes up by just 1%. If you had a $500,000 mortgage on a 30-year term, that 1% change is going to add an additional $300 to your monthly payment. So it's really important to be mindful and aware of that so you can make informed decisions. If you can get yourself into a fixed rate, you can help minimize those changes from occurring.
Yeah.
If you're buying a new loan right now in a high interest rate environment, that loan's going to cost you more money over the life of the loan just because of the rate itself.
That's a helpful perspective that you gave, because when I hear 1%, I'm like, oh, that sounds minor, but you're like, yeah, that's an extra $300, not so minor.
It can add up real quick.
Yeah, so you want to be mindful of that. Are there any smart moves people can make now to minimize or even benefit from rising rates? Is that possible?
Absolutely. If you're a saver, you're going to love the rising rate environment because that means that you're going to get paid more on their savings account. Money market accounts rates will go up, share certificate rates will go up. So if you're a saver, now's a great time to really build up that emergency fund or that down payment for your home loan or even like a college tuition, right?
Yeah.
If you're a retiree and you're on a fixed income, this could add extra money to your monthly income. There's a strategy called laddering certificates where you can kind of lock up that money for the best rate that's out there in return, but you break up those certificates into smaller ones that are constantly coming available over time, so you still have some accessibility to those funds.
Okay, so there are some benefits out there that we can take advantage of.
Yes.
Any final advice for those looking to navigate those rising interest rates?
If you are in a variable rate situation, it may be in your best interest to get yourself out of that, either through like a refinance or a consolidation loan to really bring down those high interests into something that's more manageable where you can start really taking advantage of it. Knowing this information and being aware of it, it's going to better put you in a position so when these changes do come, you're going to be able to really take advantage of these higher yield rates instead of being the victim of them.
Okay, and laddering certificate, is that something that could be helpful?
Oh, absolutely. Okay. Like the laddering is a great strategy that's not really commonly known out there because one of the fears when you have a certificate is you're locking up your funds. So now you don't have access. But what if there's an emergency and I need access, right? So instead of putting all your eggs essentially in one basket and not having access to those funds, is you can take smaller amounts and lock them up. So every month you have something maturing, and that's really accessible if there is a life event that occurs.
Okay, all helpful information. And for those who are thinking, okay, this is a lot of information, trying to figure out rising interest rates and what works best for me, a lot to think about. How can Schoolsfirst Federal Credit Union help?
Well, we have great team members in the branches and over the phone that can really take a look at what your debts are and see and help you try to repackage that as best as possible. Go to our website at schoolsfirstfcu.org. We got great resources on there, little videos that can kind of help you understand what's occurring and how you can best position yourself for that in the future.
All right. I love a video. I love a tutorial. Jonathan, always a pleasure having you on.
Thank you.
Of course. To our viewers, you can visit one of the many Schoolsfirst Federal Credit Union branch locations as seen on the screen, and you can find out more online by going to schoolsfirstfcu.org.